Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Amazon stock so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 1.45 trillion market cap. They're trading at $141 a share, and they have 10.3 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have a lot of free cash flow in 2020, but then it's negative after that. It is improving, negative 8.6 billion in the trailing 12 months. They're doing a lot of investment in CapEx to grow and scale their business. With their dominant market share in cloud computing, combined with the possibilities of AI, this company can have a $10 trillion market cap sometime in the near future. Net income is the profit or loss on the income statement. It's revenue minus expenses. That peaks in 2021 at 33 billion, negative in 2022, but a solid 13 billion in the trailing 12 months. Revenue is a sales for the company, and that goes up a lot from 386 billion to 469 billion to 514 billion, currently 538 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.3 trillion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $990 billion. We divide that by 10.3 billion shares. And we get a calculated stock price at $96. They're trading at $141, so they're trading at a 47% premium. It's a pretty strong sell according to the model. I own a lot of Amazon stock, so I'm pretty bullish on the company. It's really hard to predict the future of the company. This is one of those cases where my model contradicts my opinion. There are 57 companies in the same industry as Amazon, and if Amazon has a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a ton of CapEx, 57 billion, more than almost any other company in the world. They have a pretty good debt to equity ratio of 0.9, so for every dollar of equity, they have 90 cents of debt. Much better than the average, but worse than the median. They don't pay a dividend. They may do that in the future. They have a big negative free cash flow in the trailing 12 months, negative 8.6 billion. But that seems to be improving. They should have positive free cash flow next quarter or the quarter after that. They're one of the largest companies in the world. When you compare them to other public companies, I know Apple is bigger and Microsoft is bigger. So they might be the third biggest company in the world. It's either Amazon or Google is the third biggest. I just checked. Google is bigger. They're 1.65 trillion. Their price to book is much better than the average, but worse than the median. Price to book is market cap over equity, or stock price over book value per share. They have a really high PE, 111. When a company has a high PE, this indicates investors think the company will grow a lot in the future, which I think is the case. We can't look at their price to free cash flow since they have negative free cash flow. Their price to sales is decent. It is worse than the median average though. They generate more revenue than just about any other company in the world. Walmart may generate more revenue. I just looked, and Walmart's trailing 12-month revenue is a little over 600 billion, so they are more. So Amazon probably generates the second most revenue in the world. And they're still growing. Their 5-year annual revenue growth rate is 22%, which is pretty amazing when you have a revenue this size. I know Walmart is not growing at this rate. They're probably growing at like 4, 5, 6% with inflation. Look at the Chinese company Pinduoduo, 112%. C Limited, 93%. Etsy is surprisingly high at 41%. Newegg, 355%. Maybe I should do a video on Newegg. They reported their quarterly results last night, and they crushed earnings by 90%. They beat revenue by 2.3%. Expected earnings 34 cents, they reported 65 cents. So that's a 90% improvement. And their expected revenue 131 billion, they reported 134 billion, which I think is their second most revenue in any quarter. The fourth quarter of 2022, they reported like 160 billion, because the fourth quarter is always their biggest because of Christmas. But this is by far their biggest second quarter ever. They also beat earnings and revenue last quarter. We'll look at their financials a little deeper to see why they grew so much. At least their earnings grew so much, 90%. This could be a one-time item, like a gain on the sale of an asset. And analysts know it's not really a 90% improvement. If you strip out that big one-time item, it'll be more normalized. Let's take a look at their second quarter press release. They had their largest Prime Day ever on July 11th and 12th. Their Prime members purchased 375 million items, and that saved them more than $2.5 billion. Their Amazon business has a run rate of $35 billion with 6 million customers. In the last 12 months, their customers saved $1 billion through their Subscribe and Save program. If you order something consistently, like every month or every quarter, you can use their Subscribe and Save program, get those products automatically sent to you, and you get a discount. When you select a product, you can do any frequency. You could do monthly, you can do weekly, you can do annually, and of course, cancel anytime. They have subscribers in the tens of millions and subscriptions in the hundreds of millions. They hit their 10th anniversary with Amazon India, and so far that's generated $7 billion of exports. By 2025, they expect to have 20 billion of exports, work with 10 million small businesses, and create 2 million jobs in India. God bless Amazon. They create lots of content, like Netflix. They received 68 Emmy nominations. They created a partnership with Pinterest. That gives them exposure to another 460 million people each month. What's going to take this company to the moon is AWS, Amazon Web Services. So you can see there's a ton of things happening with that part of the business. I'll scroll through it slowly in case you want to read. You see they have partnerships with 3M, Old Mutual, Sumitomo, HSBC. Now they have a footprint for AWS in Auckland, New Zealand, and Manila, Philippines. And they've added CloudFront to Nigeria. Let's take a look at their income statement. They break down their revenue by product sales and service sales. Product sales, $59 billion, and services, $75 billion. That's up in both categories when you compare it to the second quarter of 2022. So revenue of $134 billion. For the first half of the year, it's $262 billion, up from $238 billion. Let's get a further breakdown of the $134 billion so we know what it is. Of the $134 billion of revenue, $83 billion North America, $30 billion international. And then they have a third category, AWS, $22 billion. Their cost of revenue is $69 billion. Fulfillment expenses, $21 billion. They have one of the world's best fulfillment centers. $22 billion for technology and infrastructure, marketing $11 billion, G&A $3.2 billion. So total expenses $127 billion. They have pretty slim margins, operating income of $7.7 billion. That's more than double from last year's number. So that's a big improvement. Let's get a breakdown of the operating income. A bulk of the income is from AWS, Amazon Web Cloud Services, $5.4 billion. Great margins because they have the highest operating income and the lowest revenue in that category. Really slim margins in North America, $3.2 billion, based off a revenue of $83 billion. But even worse is international. They have a loss of $900 million. Part of the loss can be attributable to foreign exchange rate conversion. Their revenue increased 11% from the second quarter of 2022. 11% growth in North America, 10% international, 12% in AWS. So it's all growing double digits. About 2/3 of their revenue comes from North America, 1/5 international, and 1/5 AWS. But we want to see AWS revenue go up because that's where all the margin is. And you heard it here first, 10 trillion market cap at some point in the future. They'll be the first company to hit 10 trillion. Let's go back to the income statement. They received $661 million of interest on their investments. They paid $840 million of interest on their debt, which is higher than last year of $584 million. So their EBT, earnings before taxes, is $7.6 billion. Taxes $800 million. So their earnings are $6.8 billion. That's compared to a loss of last year. So their EPS is 66 cents. For the first half of the year, it's 97 cents. They are increasing their shares outstanding. Last year, they had 10.17 billion. Now they have 10.28 billion. You want to see shares going down, not up. But it hasn't gone up that much, so it's not too bad. This page shows us the past 6 quarters. And this is the current quarter right here. So you can see their sales have been increasing double digits almost every quarter. A big increase in Q3 2022, 19%. They had their best operating margin this quarter, 5.7%. It was 3.7% last quarter, 1.8% before that. That's in the fourth quarter of 2022. I wonder if expenses are artificially higher at the end of the year. And they've had positive net income for the past 4 quarters. The 2 quarters before that were negative. And their net income was higher this quarter than the sum of the prior 3 quarters. Let's take a look at their balance sheet. They have current assets of $140 billion, current liabilities of $148 billion, so their current ratio is below 1, but it's really close to 1. It's probably around 0.95. Same thing last year, they had a current ratio below 1, $147 billion over $155 billion. They have $50 billion of cash on their balance sheet, $14 billion of marketable securities, so it's like $65 billion of cash or liquid assets. They always have a ton of inventory on hand, $37 billion, and they have $40 billion of accounts receivables. This is how much money other companies owe them for buying on credit. They have a ton of property and equipment, lots of warehouses, $194 billion, operating leases of $70 billion. That's the value of the assets they lease. And if you want to see how much they owe on these leases, it's right here in the liability section. They owe $76 billion on those leases. $23 billion of goodwill. Goodwill is the premium you pay when you acquire another company. Total assets of $478 billion, up about $15 billion from year end. They have $69 billion of accounts payable. This is how much money they owe other companies for buying on credit. Accrued expenses, these are expenses they've incurred but haven't paid yet, $64 billion. Unearned revenue of $15 billion. This is when their customer makes an advance payment for a product or service Amazon will deliver in the future. They owe $63 billion on long-term debt, down $4 billion from last year. Let's look at the equity section. They bought back $8 billion of stock. They raised $87 billion from selling stock, and they profited $93 billion from running their business. Retained earnings is the sum of all their prior net incomes. Let's look at their statement of cash flows. In the second quarter, they had operating cash flow of $16 billion, a big jump from last year of $9 billion. The way you calculate operating cash flow, you start with net income of $7 billion, then you add or subtract the non-cash items on the income statement. They added back $12 billion of depreciation and amortization, and then you adjust for changes in working capital. They invested $11.5 billion in PP&E, property, plant, and equipment. So when they buy a warehouse, the cost of that warehouse goes into this section, and it's carried on the balance sheet and depreciated over its useful life. They spent $316 million in business acquisitions. They repaid $7.6 billion of long-term debt, and they added $4.4 billion of debt. That's why it's an inflow. They repaid another $2 billion of long-term debt. They've done 4 stock splits. The first one was a 2-for-1 in 98. In 99, they did 2 stock splits, a 3-for-1 and a 2-for-1. And they did a big one last year, a 20-for-1 in 2022. If you invested $10,000 into this company 10 years ago, you'd have $86,000 today. That's a 24% annual return, a 750% total return. Let's look at the company on Simply Wall Street. Its last price was $129, 1.3 trillion market cap, up 0.5% in the past week, down 10% in the past year. Let's learn a little more about the company. Amazon operates in the retail sale of consumer products and subscriptions through online and physical stores in North America and around the world. It has 3 segments, North America, International, and AWS. We saw they broke out their revenue in those 3 segments when we looked at the financials earlier. The products offered through its stores include merchandise and content purchased for resale, as well as products offered by third-party sellers. If you have a brick-and-mortar retail store in your town, you can also sell on Amazon, and when somebody buys off of Amazon, you just ship to the customer. Or you can just send all your products to Amazon, and Amazon will do all the fulfillment. That's called FBA, Fulfillment by Amazon. If you want to do the shipping yourself, it's called FBM, Fulfillment by Merchant. They manufacture and sell electronic devices, including Kindle, Fire tablets, Fire TVs, Rings, Blink, Eero, and Echo. And they also develop and produce media content. We saw all those Emmy nominations. They offer programs that enable sellers to sell their products in its stores and programs that allow authors, musicians, filmmakers, Twitch streamers, skill and app developers, and others to publish and sell content. They provide compute, storage, database, analytics, machine learning, and other services, as well as fulfillment, advertising, and digital content subscriptions. Additionally, the company offers Amazon Prime, a membership program. It serves consumers, sellers, developers, enterprises, content creators, and advertisers. They started in 1994, 29 years ago, in Seattle, Washington. The two risks they list are large one-off items impacting financials. Their profit margins of 0.8% are lower than last year of 4.5%. I think they're referring to the trailing 12 months, not the current quarter. This analyst, Michael Page, values the company at $225. He says it's 43% undervalued. Here's where the stock has been trading since they IPO'd. It's really hard to tell the first decade how the stock did, but you can see it started really going up in 2014. It peaked at 186 in mid-2021, and then it got to the low 80s at the end of last year. It's up a lot since that low point, but still well below its all-time highs. Simply Wall Street's valuation is 167. They say the stock is 23% undervalued. 52 analysts priced this stock and the average price target is 147. They say it's 14% undervalued. Their trailing 12-month revenue in 2012 was $57 billion. It pretty much goes up every single year, hitting $100 billion in 2015. And then it just kept growing, hitting $200 billion in 2018. Then it doubled again to $419 billion in 2021. It's been in the low 500 billions the past couple of quarters. And the forecast is for their revenue to hit $700 billion by 2025. They had very little debt back in 2012. And then they started adding debt year after year. It got up to $25 billion in 2017. But the past couple of years, they've been adding a lot more debt. It's over $92 billion currently. But pretty much their equity is higher than their debt. Their debt to equity ratio is 60%. And they usually have more cash on their balance sheet than debt. Currently, their cash is a little lower than their debt, but they're in really good financial shape. Andy Jassy's salary is $300,000, total compensation $1.3 million. He's been with the company 2 years. In the past year, there's not much insider activity. One buy for one share by some guy, Jeff Bezos. I'm not too sure who that is. 59% of the company is held by institutions, 28% by the general public, and 12% by insiders. Bezos is the biggest shareholder at 10%, about 1 billion shares valued at $128 billion. His ex-wife, Mackenzie Scott, owns 2.5% of the company, $34 billion. Hasn't Bezos ever heard of a prenup? They had 88,000 employees in 2012. It got up to 1.6 million in 2021. It's currently 1.5 million. And the ticker trades in lots of places. The Nasdaq, Lima Bolsa, Mexican Bolsa, Deutsche Börse, Colombia Bolsa, BATS Europe, Santiago Zitra, Swiss, Borsa Italiana, Wiener Bors, Bulgaria, Kazakhstan, Sao Paulo Bolsa, Buenos Aires, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.